Hello, everyone, and thank you for joining us today. Today's broadcast is going to be a very important one because it's going to help you become a smarter and more effective Airbnb host. Because Learn Airbnb is here for you to help you become a smarter, more effective, and more profitable Airbnb host. We are constantly seeking experts to come in and teach helpful and relevant tips to make your Airbnb hosting experience a more enjoyable one. Now, today's topic is the last-minute tax deductions with the co-founder of Levee, Argel Sabillo. Argel is the co-founder of Levee, and Levee is like having an accountant right in your pocket. Their app allows you to quickly categorize all of your expenses as an Airbnb host and quickly prepare your taxes when the time is right to file. It's a must-have for all the Airbnb hosts. It simplifies the entire process. Now, having everything in one place, organized and ready to roll is a huge time savings for you as a host because we all know there are so many other things that you can be doing. Now, this tax year is coming to an end very, very soon. So Argel is going to discuss, like I said, last-minute tax deductions. And at the end of this presentation, there is going to be an offer for you, for the viewers. So make sure you stick around to the end of this viewing. Now, first things first, viewers, I know we're going to cover a lot of information today, and some of it may be very technical, and you're going to have some questions. So if you have questions while viewing the presentation, you can email the address that's on the screen right now, info@learnairbnb.com, and we'll make sure to get those answered on our live Q&A coming up in the next week. And if it's a replay you're watching right now, you can also email us at info@learnairbnb.com, and we'll take care of all those questions for you. So if you hosted an Airbnb in 2014, you probably got a 1099, and you had to fill out some extra paperwork, maybe some different forms, and that may have increased your tax burden. Now, what deductions do is they help you limit your tax liability, thus keeping more money in your pocket. The saying goes, it takes money to make money. And it's very important remembering that there are costs to doing business. Now, covering these costs is very important, and accounting for them costs is even more important. So, without further delay, I'd love to hand it over to Argel so that he can tell you exactly what are the last-minute tax deductions that you need to be looking out for as an Airbnb host. But first, I'd love if we can get started by learning a little bit more about you, Argel. So if you could explain us a little bit more about your past and how you came to become the co-founder of Levee.
Hey, Jim. First of all, thanks for inviting me to this webinar. I really appreciate you taking the time. Just a little bit about me. My background is I've worked for Deloitte for about 5 years now, mainly doing taxes for corporation, individuals, partnership. But prior to that, I have over 10 years experience preparing my own taxes as well as for my family and friends. So over time, I've always wanted to build an app that would be powerful for ordinary taxpayer to take advantage of their tax planning tool and basically maximize the deduction throughout the year. And that's basically what Levee app is. We put a lot of thought into putting all the tax planning deduction we can think of all in this app, but also make it beautiful. So I partner up with really great people that makes really good apps, and you'll see it'll be a really beautiful apps when it's ready.
Awesome. That's fantastic. I'm excited to get my hands on it. And let's hop into your presentation. I know you got a lot of great stuff to share with us today.
Let's get started. So today I'm going to present about the last-minute Airbnb tax deductions. We only have about a few more weeks left, and let's get right to it. So the agenda for today, we're going to be talking about, like I said, deductions, last-minute deduction, but we're going to break it up into like different groups. Homeowners who are Airbnbers, rentrepreneurs, renters, and other Airbnb hosts who has possibly a full-time job, a side job, or even like a portfolio of like possibly income from stocks. And after that, we're gonna talk about how we can capture the deductions. We're gonna talk a little bit about Levee app, and then we're gonna go right straight to the Q&A portion. So the first group that we're gonna cover are the Airbnb host who owns their own home. So if you're itemizing your deduction this year, so most of the homeowners, their biggest tax deduction is their mortgage interest deduction. And so more likely their itemized deduction is more than the $6,300 standard deduction. So when they itemize, there are numerous itemized deductible expenses that they can deduct now as opposed to waiting till next year. The most common one is basically your donation to charity. So when you donate to charity, to a qualified charity, so make sure it's a qualified charity, you're able to deduct your donation for this year. So one thing you can do is, instead of waiting until next year to make a charitable contribution, you can make a donation this year and it will count towards your 2015 tax returns. That way you're not waiting a full year to deduct your donations. And like I said, make sure that you take picture of your receipt and put it in a safe place, because I'll tell you, that's like one of the things that many taxpayers forget to deduct is their donation. And it's mainly because they lost the receipt somewhere or they don't remember their donation back in like January.
And when you talk about a qualified charity, is this a 501 or 503 CB type thing, or what makes it a qualified charity?
Yeah, to make it a qualified charity. So like if I say I open like a charitable organization and just start collecting money from family and friends, and I didn't get certified by the IRS, then that doesn't count as a charitable organization. It has to be vetted by the IRS, and then they have to file a form at the end of the year, a disclosure form. It's kind of like a tax return. So there's a lot of rules around 503c charitable organizations.
All right, sounds good. Cool. All right, let's continue then. Thank you.
Yeah, no problem. So the next one is state tax payment. So the estimated tax payment for Airbnb hosts is due on January 15, and that's for the Q4 payment. Instead of waiting until Q4 to make your estimated tax payment to both the IRS and, say, the state of California, you can make those payments now instead of waiting until January 15. The benefit of that is that you can deduct your, say you paid $500 in estate tax payments. Instead of deducting that on your 2016 return, you can deduct that on your 2015 return if you take actions now and pay that. So I think that's a big one to make your estimated tax payments. Next one is the property tax bill. So when you own your own home, you get this property tax bill from the state. I know I get one from California, and it's an installment. So I pay one this year and one next year. What I tend to do is pay it in advance and pay it in full. That way, the second installment, instead of deducting that in 2016, I can deduct that on my 2015 tax return. The same as repair and maintenance. So you can accelerate some of these expenses now as opposed to waiting till the beginning of the year. If you have to change the locks or something broke and you need to fix it, get that done now instead of waiting till then next year. Keep in mind though that if you are fixing your roof, for example, then that's deductible. But if you are replacing your roof, then you can't just deduct the entire amount now. You have to somehow capitalize it.
And capitalizing means that you take that expense over a certain amount of time, correct?
Exactly. So basically, however much you spend on the roof, you have to divide it by like 39 years and then slowly depreciate it every year, 39 years.
All right, so that would be like a $10,000 roof, and it's got a useful life of 30 years. You would just take 10,000 divided by 30, and that's how much you can write off every year, correct?
Correct.
Okay, great, cool. Let's hop on to the next one.
One last thing for homeowners, because the standard deduction is $6,300, it only makes sense to take itemized deduction if you can go over that threshold, right? And then so one strategy that a lot of tax planners do is what's called stacking, where you stack up all your itemized deduction this year or next year, and then the following year you claim a standard deduction. So in our example, if you already have a lot of itemized deduction, it makes sense to accelerate a lot of your itemized deduction, these 4 sections that I talked about. And then next year, since you're not going to have enough deductions, itemized deduction, then it makes sense to take the full 6,300 standard deduction. So just a quick tip.
Okay, cool. Thank you.
All right, the next section is for Rentrepreneurs. So Rentrepreneurs, and I know Jim has covered this a lot, but basically you have your Airbnb host who may have one or more Airbnb units, and they decided to somehow LLC or form an S corp or a corporation in order to protect their personal asset. In the state of California, if you do business here, then you have to pay the $800 business tax. That's per entity that you incorporated. So for this, you can pay, it's $800, and you can prepay it ahead of time. so that you don't have to wait until 2017 tax season to claim that deduction. That's one way to get more deductions now. Another expense that you can deduct now is, if you're have website costs or advertising, if you're listing your space not just on Airbnb but on other platforms, or even if you create your own website for this, think about doing all that now as opposed to waiting till the beginning of the year so that you can take advantage of those tax savings. Another one is purchasing computers, equipments, furniture. So basically, anything you need for your Airbnb operations. Instead of, a lot of people like to wait till the next year to, start new, start fresh, ramp up sales or ramp up, the operation. Like, I really advise doing that soon rather than the beginning of the year. The reason for that is, if you spend all this money in January, you're not going to be able to reap the rewards, the benefits, the tax savings until February 2017. So do all that now. And there's this thing called 179 deduction, where businesses, individuals who Airbnb hosts, who's operating their business more than 50% at a time, doing business versus personal, you can claim up to $25,000 in what's called 179 deduction. So what that is like you bypass all that depreciation that Jim just mentioned earlier. You don't need to capitalize and depreciate it slowly. You can take all these expenses right away, and certain rules apply. This is one of the complicated, well, it's not that complicated, but it's good to have somebody like us take a look at it with you if you're planning to take this deduction, because there's just a lot of there's always rules and there's always exception to the rules when it comes to taxes. So you want to make sure that you cover all your bases. So talk to us if that's something that you're interested in. And finally, the travel costs to manage a multi-state property. So like I said, some Airbnb hosts have properties. I have this client where she lives in LA and has a unit based here in LA, but also in New York. And once a year, she flies out to manage the property. She can deduct that now. So if you buy the plane ticket now, as opposed to waiting till next year, even if you go next year, if you buy that ticket now, you'll be able to deduct that this year. Just make sure that when you're traveling to New York or wherever your second property is, that it's mainly for business and not for personal, because the IRS gets really that's something that they look into. So you make sure that you have your record straight, that you have some sort of log that you can substantiate if you get questioned by the IRS.
That makes sense. Yeah, keeping your itinerary or maybe a list of people that you were hanging out with or meeting with in that time, if it's for business and things like that, correct?
Exactly.
Okay, cool.
So renters, they typically claim standard deduction unless they have a large itemized deduction like medical bills. So for the most part, majority of deductions for renters are going to come from Airbnb operations. One way to accelerate all the deduction is to pay for your CPA now, pay for services, cleaning services. If you're taking a class, or if you're doing a consulting with you, for example, Jim, I mean, paying all those now is beneficial for you because you only have to wait a few months until you can claim the deductions for it, as opposed to waiting till the end of the year. So that also goes with prepayments of like an app. So I will talk about it more with Levee, but paying for something like Levee, well, it's good for like 12 months. That's also deductable now, as opposed to waiting till next year.
That's good to know. That's a really good thing to know. Like you can, you're gonna have professional services next year. You're gonna have a CPA. You're gonna have, someone that's doing your cleaning or doing your management. You can pay how much forward can you pay? Is it only for the 12 months going forward, or how much can they prepay on those kind of professional services?
Yeah, that's a really good question. That's a good segue to number 3 and 4. So basically, any prepayment expenses, including medical, dental insurance, if you're accelerating your rent payment or rental insurance premium, typically you're not allowed to take a deduction on them. You can only take a deduction, say, for that 1 month that it applies, right? As opposed to taking the full year. And you'll see it in a lot of publications saying, oh, you can deduct your rent payment. But there's an exception to that rule. And that rule is right here at the very bottom. It says the regulation code section. And it's also called the 12-month rule. And what that is basically anything, if the benefits doesn't extend beyond 12 months from when you received that benefit, for when your policy started, then you can take that deduction now and you don't have to capitalize it. Because otherwise you have to, you can only take, say you paid for a full year, or say you paid for 2 years, and then there's only like 1 month left in December. You can only take 1 month out of that, 24 months. And the rest, even though you paid for it now, you have to capitalize it over time. And that's what's good about this 12-month rule. So if you know the rules, just make sure that whatever you're paying for is only covering 12 months and under.
Makes sense. That's a very good point.
All right. And the one I didn't cover there is, stock up on hygiene and medical supplies for guests. So that's basically, if these are reoccurring expenses that you have. So do a Costco run before the end of the year, and then replace the linens, the bathroom products, supplies. Like food for guests, it's actually supplies, because you're not really making money off of it. As long as you dedicate it fully to your guests only and you're not using it for personal use, those are deductible expenses. First aid kits, any cleaning supplies. Cleaning supply is a big one because everyone needs all that. So stock up.
The things you're going to buy for next year, you might as well go out, get the Costco run done now so you can get that tax benefit, in 2015. And to make a point about that, when we say that you're going to get the tax benefit for your 2015 taxes, that means when you file your return, you're going to get the money in 2016 instead of having to wait another full year. So if you get this stuff taken care of in the next 2 to 3 weeks, you can benefit, 12 months sooner. That's the point we're trying to make, correct?
Exactly. And that's the real power of tax planning. And like I said, if there's not enough tax literacy out there, and if people just know about these things, they don't have to find jobs to make more money. Like they can take care of whatever they're making and just keep more, and don't let the IRS take so much of your money if you can take it now.
That makes sense. Yeah. And then also, I want to point something out that hey, you don't have to be an accountant to do this stuff. Simply, all you have to do is that you have to go out, make the purchases, and keep the receipts so that when you go meet with your accountant, you have the proof. You don't necessarily need to do the forms and the filing. Just make sure that the cash outlay is done before December 31st, correct?
Exactly.
Okay, yeah. Cool.
Because they're going to need that. They're going to need to know basically when you spend that money, right? So it has to be 2015. They want to see who you paid, the vendor. They want to see a description of what the expense is about and if it's business related. And a lot of these things, as an Airbnb host, you can substantiate if you just keep good records. Like you said earlier, if you're meeting with a client, that you document who that person is. That doesn't require a receipt, but it requires for you to have some additional documentation in addition to a receipt or a credit card statement.
Yeah, it's just the simple steps that you take to make sure that people know, what you say you're doing is really what you're doing. So don't overthink this too much. It's just keep your receipts and keep a good log of the activities you do. If this is a good business practice, no matter if you're trying to plan your taxes and bring down your tax burden, you should be doing this anyway.
Exactly. All right. So a lot of Airbnb hosts or a lot of participants in sharing economy, the providers, they also have full-time jobs. And I'm seeing this more and more with the type of clients that's coming in for us. And it makes sense, right? A lot of people still have a full-time job and then to have a side income that Airbnb at their place. So it's actually a good thing in a couple ways. And I'll cover that here. So one way that, if you're good with your finance and you know what your tax liability is for the rest of the year, then you can kind of know how much income you're going to generate for the rest of the year. And then so one way you don't have to pay a lot of taxes this year is you defer your income. And obviously this is only if you can afford it, right? So if you can afford it, and you're making enough this year, then I would defer my December income. And there's a couple ways you can do that. One way you can do that is through your employer by changing up your contribution. Basically, you're putting more money in your 401k plan, which is your retirement plan. And later, when you retire, you can reap the benefit of that, which is a lot of money over time. That's one way to defer your income. And you can contribute up to 18,000 in 1 year. And when you're 15 older, you can do an additional contribution. It's a catch-up contribution of like 6,000. But that's one way of like deferring your income and not getting taxed. The other component of that, of being employed, is the ability to have tax withholding. So if you're a full-time Airbnb host, you have to pay quarterly payments for your estimated taxes. And I know a lot of people are not doing this, but the IRS can charge you taxes, basically penalty and interest, for not paying in time, because they require you to pay every quarter. And so if you didn't pay for the first 3 quarters and you pay Q4, then that's good, but you might be on the hook for that Q1 to Q3 for penalty. What's beautiful about the tax withholding, though, is that if you contribute today, the IRS assumes that anything that you contribute throughout the year for income tax withholding purposes is spread out throughout the year. So that's one way to get around the penalty if you haven't paid your estimated taxes yet.
Great. So that means that if you haven't paid those penalties, or you haven't paid those Q1 to Q3 bills, make sure you have a little bit more withholding on your check that's coming from your actual day job. That helps to offset that, and that will help, like you said, wash that penalty away. Correct?
Exactly.
Good. All right. What's number?
Yeah, those are like a couple of benefits of having a job in addition to doing Airbnb hosting.
Yeah.
So other Airbnb hosts has like a portfolio of stocks, and this is another way of kind of controlling your fate when it comes to how much taxes you're gonna get taxed this year. And this is one good strategy of how you can get taxed less. So let's say you're in a high tax bracket this year, and you ended up selling some of your stocks for a huge gain, therefore putting you in a large tax bracket. One way you can lower your tax liability is to sell your loser stock, and it will offset your gain with your losses. In addition to that, if you have more losses, let's say you have more losses than gain, you can take up to $3,000 of your losses and offset it against your regular income or your Airbnb income. And if you have more than 3,000, let's say you had $5,000 in loss this year, you can deduct up to 3,000 and then carry forward the other 2,000 next year. So for as long as you have these losses, you can deduct them every year. Just make sure that you're tracking them, because it's easy to forget that, oh, I had $2,000 of losses last year, so I just missed out on, X amount of deductions this year.
That's good. Yeah. So if you don't take the full amount of your loss for this year, make sure you keep a note somewhere within like a little tax folder that you get more money to write off next year.
Exactly. And, and this might not apply to a lot of people, but if you are on the 15% tax bracket, meaning that you didn't make enough money, maybe you just started Airbnb in like November and throughout the year you didn't have a job. If you're in a 15% tax bracket and you had stocks, then any gain on that stocks is not taxable. So that's another good thing. And another way you can do this is if you can gift it to like your parents, and then your parents, when they do their return, they're in a low tax bracket, and they don't have to pay taxes on that gain, no matter how large it is. So those are like tax planning techniques surrounding stocks.
Okay.
And the last one there is the student loan interest. So if you're making less than $80,000 in modified adjusted gross income, you can deduct up to $2,500 in student loan interest. So, you can accelerate some of those payments now, especially if you think that you're going to be making more than $80,000 next year, because that will start to phase out, and then you're not able to claim those deductions on your student loans.
Yeah, that's a good one. I mean, I know that, a lot of us out there, we have those student loan payments and we come in and they just pay them. But you make a good point that, hey, if we're becoming better at our job and getting paid more often and getting, not paid more often, but getting paid more money, those deductions that we take for granted, such as student loan interest, are going to expire or extinguish, and we're not allowed to take those. So you make a very good point about accelerating your student loan payments.
Yeah, exactly. All right, so here's a little example of why it matters to do some tax planning and take some of those deduction now. So just the deductions that we talk about, let's say we have these two individuals, Airbnb hosts, who have the same tax profile. They make the same money, same deduction. Ben Trong just happens to not listen to this webcast and didn't take the last minute deduction. He waited until January 3rd to take the same deduction as Amy Wright did. In this example, even just a $2,000 of deductions that you've been proactive about between now and December 31st, you can potentially make an additional $500 just for taking actions. And that's just a calculation based on your income tax rate. That doesn't even include if you are a self-employed individual, which is an additional 15.3%. So you can potentially have like $800 in tax savings for spending $2,000 on things that you're going to spend anyway. So that number could be really huge, right? If you're looking, yeah. So make sure you take those deductions now.
Timing is very important. I mean, it's of the essence. Like, get it done before December 31st, because like once the ball drops on January 1st, the new tax year starts, and then that's it, and that's all she wrote.
Exactly. All right. So how are you going to be able to do all this, catch all the deduction that you have throughout the year? Well, one is you can scan through your bank statements. You can do it manually with paper statements, or you can go online and then you can do filters and look at all your debits and credits and just scan through possible deductions, right? So when you bring it to your accountant, then you know that, hey, these are like deductible expenses that I have. And, it helps you figure out, okay, maybe I can estimate how much I'm going to be making for the rest of the year. And does it make sense for me to tax plan? And this webcast is also good for like the beginning of next year, right? When you're thinking about tax planning for 2016, you can apply some of these steps on what you can accelerate now, or, a lot of it is going to be timing. So make sure that you're working with someone that can really help you maximize the amount of deduction you can take year over year. The other way you can basically capture all your deduction is your cash transaction. You're not going to have it on statement, so make sure you have these receipts, and make sure that you have like some sort of system like an Excel to record all your receipts. Because if you bring a box of receipts to your accountant, they're going to end up charging you more in fees as opposed to just you like being good at really having a system of recording what you think is business deduction and having documentation around that and just saving it till the end of the year. Same goes with like your donation receipts. Like I said earlier, that's so easy to lose. And that's one of the things that the IRS look for is like you usually get a receipt from the charitable organization with their signature of the president, saying this is how much you donated this year. Thank you for your donation. And then it also says that they're a qualified charitable organization. So make sure you save that. One good way to do that is like take picture of it and then like send it up to the cloud. And tax year comes, you'll have a folder of like tax documents that you can just like hand out to your CPA or your accountant. And another way to catch all your deduction is actually using a mobile app that either tracks expenses, where you can connect your bank accounts, or track mileage, right? And that's what Levee is all about. And just gonna jump right through that. So Levee is basically an app that we created, and it's a powerful financial tool that's also a tax tool designed with Airbnb hosts in mind. So basically the app is it's a one-stop app pretty much for financial reporting by jobs. So if you have if you're doing Airbnb and you're also doing like maybe TaskRabbit on the side or Ubering on the side, this allows you to have a financial reporting by jobs. It also has an accurate tax record keeping because your account is connected to a bank account, and it will allow you to eventually know where you are and able to determine, okay, if the IRS question you're in this location, like it really helps you. The power of this app eventually is going to be able to do all that things. And with all the things that we talk about, this is also a good tax planning tool, because you're able to just swipe left or right if it's business or personal. So once you start applying some of this, if you're doing a Costco run, for example, and that's for Airbnb host or Airbnb, then it pulls up on your business card or debit card, and then you just swipe left or right if it's business or personal, and then it'll just go into like this data bank, and that data bank then goes straight to our tax account who prepares your return at the end of the year. Like I said, it accurately track and categorizes your business and income and expenses. And by doing that, you save time and money, because you're able to just do it all in one app. And at the end of the year, you just let one of our tax expert know via an app that your returns are ready, that you've accumulated all your data. And how does it work? So when you link your account to basically your, like I said, debit or credit card account, the best practice is actually to have a business bank account for all your Airbnb. But we all know that, that's just not convenient. Like, I have a client where she's been wanting to open a bank account for her Airbnb business, but the bank requires so many things for her to open a business account. And then so, for a long time, she's been having just this one account where she commingles her personal and business. That's just generally not advisable, but if you have no other alternative, one thing you can do is connect that bank account into Levee, and basically it will help you track and categorize your business expenses and mileage. And like I said, it's by job, so at the end of the year you get a summary per job of how much you make after tax. And then another component of Levee is throughout the year, if you receive receipts, if you receive donation receipts, when you get your 1099 at the end of January, or any of your tax documents, you can take pictures, or if you receive it via email, you can forward that to us, and we have a secure data bank where all your tax information is secure until you're ready to e-file your return, and then one of our tax experts is going to do your return, and then when it's ready for you, you just sign via the app and it gets e-filed. It's as easy as that. So what we have for our attendees today is a free subscription to our app for 3 months, and also a 20% discount for the first year that you signed up with us using this code year-end. And if you go to our website at www.getlevee.com, that's where you put your email as well as the code, and we'll get in contact with you come tax season.
All right, great. Argel, thank you very much. That presentation was very helpful. And I think it's a very generous offer. Being able to try the app for 3 months, see how you like it, see if it fits into your life, which it should. We live with our phones in our hands pretty much all day or all night, in our pockets or in our hands or in our purses. Having the ability to plan your taxes and not have that burden be so much, Levee is an invaluable resource for Airbnb hosts, especially when you have so much going on. You don't want to have to worry about your taxes. So again, thank you very much for that very generous offer. We'll make sure that the details and how to redeem that offer are available in the description of this video. All right, so next, Argel, I'd love to hop into some questions that I have after watching the presentation. And I know that we've, just watching this, like I said, I've come up with a few questions and things that have come up over the past few months with other readers and viewers asking me questions that, I didn't have a resource to ask them, so I'll be glad to ask them for you today. So viewers, this is not a live presentation right now. We will have a live presentation on December 15th. So make sure you send email your questions over to me at info@learnairbnb.com. And if this is a replay and it's past the December 15th, maybe it's in 2016, also send your questions in. We'll make sure that they get answered by Argel and his team and you'll be taken care of. So one of the most important things in becoming an Airbnb host is that you want your place to look pristine. You want, the doors to work well, the locks to work well. You don't want things, the sink leaking, or there's an issue with the wallpaper or this or that. You want to make some home improvements. And are those tax deductible? And is it different between renters and homeowners?
That's a good question. It's not different between renters and, well, it is different between renters and homeowners. Basically, repairs in general, like I said, we had the same example as the roof. So if you have repairs, then you can deduct that right away. However, if you have home improvements that relates to like big items, right, where you pretty much replacing them, you're not really repairing them, or if you're making home improvements, like let's say you decide to build a home in the backyard for Airbnb, well, that you can't deduct all the expenses right away. You have to depreciate that over time. It's different between homeowners and renters because homeowners are able to take that deduction and then capitalize it because they own it.
Mm-hmm.
But as far as like renters, generally when you're renting, you have a landlord, and then the landlord, reimburses you for any expenses that you have. And then so you're not able to deduct that if it's a home improvement, because the owner is going to be able to one who's going to be able to supposedly pay for that and then claim it as a deduction via depreciation
on their own taxes, right?
Exactly.
Okay, cool. So, but if you are a renter and you make improvements where you don't tell your landlord, you are able to take those deductions on your own, correct?
If you're a renter and you have expenses, a lot of the things that renters have are minor repairs, not really improvement. They're not, they're not making the place better because they know they're not going to stay there. So a lot of their expenses are going to be qualified under repairs.
Perfect. Okay, cool. So now what are the most common deductions, and more importantly, what are the most commonly missed deductions for hosts? Because I know there's like so obvious to deduct, either maybe your rental payments or your own mortgage interest, but like what are some other common deductions, and what are the ones that people miss that it's like, oh my God, how did I miss that?
Yeah. Well, I mean, just keep in mind that as a business, you always want to think about, if you have to spend money to make money, then more likely you'll be able to deduct those expenses, right? A lot of times as a business, you're always thinking about profit. And then so when you make all the expenses, you're not just spending it just because, right? And unless you're spending it for yourself, and then you're not able to take those deductions. There's like a lot of limitation when it comes to commingling personal and business. But that's what's interesting with Airbnb and other sharing economy, is because you're using your personal assets and using them for business, right? And so when that happens, then you have to allocate between personal and business. So your most common deduction is pretty much gonna be, right, your utility, your supplies, furniture, rent if you're a renter, but you're not gonna be able to take the full deductions on it unless you exclusively rented it out and you didn't live there.
Okay, cool. That brings me to my next question. Let's continue with this one. So what are the commonly missed ones?
The commonly missed one, I would say, is your Airbnb fees is one. So basically Airbnb charges you 3%, and that doesn't show up anywhere, right? It's not like you get a receipt from Airbnb saying, hey, we charge you 3% for using our platform. So that's one thing that people commonly miss, unless they know that, like they find out when they reconcile their 1099 against how much they took home. They're like, oh, how come there's difference between, my 1099 and my take home in my bank account? Well, that's the Airbnb fee, and you can deduct that amount. The reason you can deduct that amount because Airbnb, when they gave you 1099, they included it as income, as your income. And so to get rid of that 3% as an income, you have to report an expense to offset the two. So make sure you export your CSV file like on the transaction history, and you're able to like calculate how much was the Airbnb fees, and you give that to your accountant or to us if you're using us as your tax preparer. The other common ones are HOA fees, one. So historically, HOA fee for homeowners out there, it's non-deductible on your Schedule A. But as soon as you use your home as business, then business-related HOA fees are tax deductible. Let me see here. So therefore, that's one thing that a lot of homeowners miss. And lastly, cell phone bill. This is tricky because sometimes people take the full deduction and sometimes they don't take deduction at all. So the way you would calculate this is by percentage of how much you use. So it's kind of like an estimate approach on how many hours you think, or what's the percentage that you use your phone for business versus personal. If you're Airbnb throughout the year and you have a lot of bookings, then most likely you're using your cell phone a lot, to get in touch of like the host, and same as like your internet bill, right? It's you're always on your phone, on your computer, coordinating with your guests.
Okay, cool. What about, one last thing is, like, what if you purchase a separate laptop or a separate MacBook just to do your business expenses on? Would that be a deduction that they could take?
Yes, so that's what I mentioned earlier, if it's a Section 179 deduction. So if you're taking a computer and you're using it for business, you don't even have to depreciate it. You just take the entire amount. But a lot of these things, obviously could be questioned by the IRS, depending on, what they think. Sometimes you get lucky too with like the IRS agent that's helping you. Some of them are strict. Some of them are pretty, understanding. But in general, if say I have my own personal phone and then I bought a second phone, right? Let's say I'm an Android user, but a lot of these apps only uses iOS. So I bought an iPhone for my business. Now I have two phones, and everything in that second phone should be deductible. That's the same as laptop, right? If you have multiple laptops and you're using it for business, generally, yeah, you can deduct that as long as it's not lavish. And I don't think an iPad, I don't think it's Apple is lavish. I mean, Apple can do many things that Microsoft can't. So I wouldn't.
Perfect. All right, cool. So then now there is this commingling. So, if I'm using my space for my Airbnb space for personal use, what is the formula or the rule of thumb to calculate my deductions?
So the rule of thumb is you spend $1,000 in let's say you spend $1,000 in rent, right? Let's just keep it simplistic. And in order to calculate your deduction, you have to figure out, one, what's the percentage of expenses that are used for business, right? And the way you would calculate the percentage of business used for business is two-way. One is by square footage approach and the number of days used approach. So let's just break that down, for example. So the annual expense is $1,000 in rent, and square footage of, you have to calculate the square footage of your home that you use for business exclusively. So if you have a 800 square feet home and about 400 square feet you use for Airbnb exclusively, then you can take half of the square footage percentage. In addition to that, you also have to multiply the days that you Airbnb your place. So if this is exclusively, so let's say 400 square feet is exclusively for Airbnb, you don't use it for personal, then your equation is you have your 1,000 times 50%. Then you can take $500 deduction. So the formula is your annual expense times the square footage percentage times the day of use percentage.
Which is the occupancy rate. So let's go back to your example. So let me know if I get this right. You have $1,000 rent per month. Half of that square footage is used for Airbnb exclusively. So now you're at a $500 deduction. But
Yes.
Now if you only have, say, 25% occupancy, you can only really take $125 a month. Is that true?
That's true if the property, if the space is tainted. Tainted meaning you also use it for personal. If you just make the room 100%, like you never use it for personal, and
Mm-hmm.
it's available throughout the year, then you could take, 365 over 365.
Oh, it's the amount that it's available, not the amount that you booked out then. Because
Yes,
if I have this room, but no one ever comes, I can still deduct half of that.
you can still deduct 365 days unless you're using it for personal.
Okay, cool. All right, well, that's good to know. Then you don't have to worry about your occupancy rate necessarily. It's just how often is it available strictly for Airbnb? And if it's 365 days a year, any Airbnb guest can come in, then it's that full percentage then, correct?
Exactly. So
Cool.
one way to actually tax plan around that is like if you want more deduction on your rent, utilities, um, and other home related expenses, then you should try to increase your square footage for Airbnb. And when I say square footage exclusively for Airbnb, I mean if it's a bathroom, like an extra bathroom and a bedroom, then that counts. But if it's like common space, like kitchen or living room where you're also using it, then there's like a lot of tax laws out there discussing how you cannot deduct those common spaces.
Okay, cool. All right. Well, if anyone has questions further on that, because I know it's a little of a technical topic, feel free to reach out to us and we'll connect you with Argel or Argel directly. You can contact him. So I know one of the bigger contention points or things that are more confusing is, should I claim my deductions on Schedule C or Schedule E? Could you explain a little bit more about, which schedule is best for which demographic?
Yeah, so this question it's on a case by case scenario. But in general, you can take it either in Schedule C or E, meaning when you're reporting your Airbnb income and your deductions. If you rented your place less than 7 days or less on average, um, which a lot of Airbnb users do.
7 days a month or a week, or what are you talking? A year?
Yes, the way 7 days on average, the way the IRS defined that is you take your full year of the number of days that it's been occupied.
Hmm.
You take the number of people that occupied it, and you can double count the same people, and then you divide the two. That's how you get your average per day. Does that make sense?
So let's do an example because I don't 100% follow.
Okay. So let's say you had 5 people. Let's say you have 10 people that rented on average. You have 10 people. You have 10 people, and then your total for the year was 300, right? 300 out of 365, you were booked
Okay.
because of this 10 people. Okay, so you divide 300 divided by 10, so that's 30 days.
Hmm.
So 30 days is your average.
Okay. Okay. All right. So average stay length, the length of the stay, correct, is what you're talking about?
So in general, if you're providing less than 7 days on average, or if you're providing less than 30 days and you're providing substantial services, then the IRS said that your activity is not rental, your activity is business. Therefore, you claim your deduction on Schedule C. Okay, and what do I mean by substantial services? Substantial services is pretty much the same thing that hotels and bed and breakfast hosts provide, which I think it's very closely similar to what Airbnb provides. Therefore, unless you're doing long-term rentals, most likely, you're going to be on Schedule C. Um, so
Okay.
those are the distinction between the two. However, if you have a full rental with annual lease, right, then on average you're running a true rental unit, right, where it's like I said, more than 30 days, and you have a lease agreement. Your traditional lease, like when you lease out your place before you subleased it.
Hmm.
Then you can report that on Schedule E if that's the type of operation you're doing, and those are passive activities.
So, like I say, most people are going to end up on Schedule C because they rent for the less than 7 days on average, and so that's true, right? Most people will end up on Schedule C, but if they have questions, they can contact you specifically about that because you say it is on a case by case basis. You can't really make a general assumption for the crowd out there because, like you say, it is a case by case thing.
Yeah, and there's a calculation involved behind it, right? the thing with Airbnb hosts is that some Airbnb hosts have like long-term tenants.
Hmm.
They went up more than 30 days, and then so they could fall under that schedule E. It's just a matter of like case by case. What's your situation? What's your tax profile?
Gotcha, gotcha. Cool. So another one I wanted to hop into is, how much should I withhold from my taxes as an Airbnb host? Like, should I, every time I get, a direct deposit from Airbnb, should I be putting a certain percent aside for that? Or how would you, for the common person, how should we plan for that?
Yeah, I think that's also case by case, right? Because some people may have additional deduction in addition to their business income and expenses. They could have children. Those are exemptions. So it's really based on your tax situation. But if you want a percentage in general, what's generally accepted out there is 30%. Because if you're going to be in Schedule C, then you have to pay at least that 15.3% in self-employment taxes. In addition, any income taxes that might net out after you take all those deductions, exemptions, standard deduction. And so 30% is a safe number. But if you're in state like New York City, they have really high state taxes because they charge you state tax and city tax. So if you are in New York City, then I would say 40%.
Okay, good. Well, that's good to, at least bank some money, because you don't want to get a big tax bill and say, hey, I have no clue how I'm going to pay this. So put some money aside for it. But like you say, this is a case by case basis, because it becomes like, how much money are you making? Do you have another job? Do you have the stocks? Do you have these certain other deductions? So it's very, very sticky situation or hairy situation. So just put a little bit of money aside from what I'm gathering from you.
Right, exactly.
All right, cool. So now I know, Levee, you're offering us 3 months free. How much is the app actually to use if we want to go beyond that 3 months? How much is it going to cost?
Yeah, so the app by itself, it costs $50 a year, and that's payable via paying it now at $50 or $5 a month. And there's no obligation to sign up. You can definitely sign up and cancel anytime. There's no commitment to it. However, if you also engage us to do your returns, then it's $250 for both the app and the tax return preparation. And that's actually really affordable in comparison to a lot of CPAs, and CPAs can be $500. There are like generally $350 for tax return prep. But we feel that if we put an investment in our users and they help us help them, then we all benefit. Therefore, we feel that $250 is a really good incentive for people to sign up.
Yeah, it's a very fair price. I mean, it's good. Like you said, you may have to pay 500 or even 1,000 depending on your location and what the CPAs are available. And especially if you're waiting until like, April 1st to start doing your taxes, most CPAs are like, hey, we're so booked, we can't even take on any more clients. So it's good to know that there will always be someone at Levee to take care of your tax situation for you.
Yeah, and we know ahead of time, right? Because when you sign up for the app, we know that you're tracking your expenses, and throughout the year, we know that you might need tax help, and then so we're prepared for that to happen, and that's what we would like. The goal is that one day, and then their taxes will be done.
Awesome, awesome, cool. So when is the app going to be ready, and is it available on iPhone, Android? Let me know.
Okay, so the app is going to be available on iOS to begin with. We're estimating the app will be ready by the beginning of the year, but we're working day and night to launch this beautiful app in the App Store. And in the meantime, though, our tax experts are in standby for questions, or if you want your returns done this year, you can definitely engage us now rather than wait till the end, till like April, to get your taxes done. And alternatively, you can also subscribe on our website and then read our blogs, and we'll reach out to you.
All right, fantastic. Well, I'm very excited for that to come out. I'm sure the users are very excited to come out because it is such a time saver. Guys, you need to get on something that is helping with your tax planning, because when you have all these receipts, you have a folder of receipts and things like that. It becomes a very mind-heavy burden on yourself. So Levee will help take that burden and that pain away from you, as well as maximize your deductions, as you saw in the example that you could be getting a $500 or $600 extra tax benefit from just doing a few little things that make a huge impact on you. All right, so for the viewers again, there's a very special offer that Argel has given to the Learn Airbnb community, and you can redeem that offer. Argel, can you tell us again how to redeem that offer?
Yeah, to redeem that offer, go to www.getlevee.com, and if you scroll all the way down, you can leave your email as well as the invitation code, and the invitation code is year end. And do that as soon as possible, and we will make sure to give you the 20% discount and the 3 months free for subscribing to the app.
Fantastic. And it's, get on it sooner than later, guys. And that's all the questions I have today. I'm also going to post the how to take care of that offer in the description of this video. But that's all we have for today. If you have any questions, any of the viewers, if this is, no matter when this is, please send us the questions on your email at info@learnairbnb.com. We're having a live Q&A on December 15th, 2016. So if you can join us for that, that would be fantastic. But again, if this is a replay, make sure you email us your questions at info@learnairbnb.com, and we'll make sure to take care of you. Again, Argel, thank you so very much for taking the time to explain, the last-minute deductions that Airbnb hosts can take care of and take advantage of. The Learn Airbnb hosting community has, greatly benefited from your time today. So thank you again very much. We really appreciate it.
You're welcome, Jim. Again, thanks for your time, and thank you for hosting. I appreciate, hopefully we do this more often.
Yeah, it'll be great. I'm sure we'll have a follow-up because, as we all know, taxes come every year, and there's always something new to learn about taxes. So again, Argel, thank you, and have a good one. I'll talk to you soon.
Sounds good. Thanks.